No.
All right, welcome everyone. Yes, Harvey says, I am on a field trip here today. So every day I host a live mentoring program at noon where we cover different strategies in the market. We cover trades that are triggering at that time. And so when we have other classes like over here for you guys, we call it a field trip. And our field trip here today brings us to my favorite all-time trading strategy. And this is one, if you've heard me speak over the last 25 years, you've no doubt come across this strategy. And it is one that I call the Phoenix. And the reason we call it the Phoenix is that it is the first initial primary continuation pattern in a brand new uptrend. So you don't yet have a full confirmation of an uptrend. You don't have a series of higher highs and higher lows yet. What you do have is a higher low. And so these are strategies that set up when we're coming out of trend exhaustion on the downside. We begin to look for them at those levels. And we can even find them a lot of times within congestion zones as well that will start to indicate, hey, what direction is this congestion zone going to break? And we had the smashing good luck this morning to have a Phoenix trigger the reversal right off of our lows here this morning. So I'm going to be covering that, and I'm also going to show you examples of Phoenixes from way back. We're going to go back into the whirly twirly time machine here, and we're going to go back and look at some setups from 2019. And the cool thing that you're going to see is that the setups from 3 years ago, they were taken the day I gave that trade or that presentation, are exactly the same as they are now. And you're going to be looking for all of the same characteristics and same traits on today's strategy as you would have 3 years ago, as you would have 20 years ago. So this is something where no matter what market you're trading, no matter what time frame you're trading, you could be trading gold or oil, you could be trading bonds, you could be trading cryptos, Bitcoin, Forex, you name it, anything under the sun. This pattern is going to be a mainstay in your technical analysis box. So let's go take a look over here at the Phoenix. So what is a Phoenix, you guys? Well, the Phoenix is, again, just that first brand new uptrend kicking off a totally new trend. So there's two traits that we want to look for to begin with. We want either an exhausted downtrend, and I'm not going to get too much into trend development here today, or we want a longer zone of congestion. And what we're looking for is a momentum shift taking place in here, where we get a nice pop, a shift for a more gradual pullback, and that's going to create that higher low there. And as that channel breaks, that's going to give us multiple entry triggers for this. And I'm going to break those down in a little bit more detail here as we move forward. This is just your core template of what this pattern looks like. So one of the things that can help increase the odds of success on this pattern with a downtrend, for example, is if this is your downtrend channel and you're coming down off of those lows there, if you're noticing that it's broken the upper end of that trading channel and now you've get that slower, shallower pullback, it might have the same overall momentum as that downtrend channel did, but it breaks the upper end of that trading channel and then forms a smaller channel like that. That is a really good indication that you've got a Phoenix starting to develop. And that's exactly what happened here today as we were coming off of the lows in the overall market this morning. I originally traded the reversal ahead of the Phoenix, but the Phoenix itself is what led to nice continuation on it. So in this case here, if we just kind of pop up our NASDAQ chart, above this here, here's what we're looking at. We've got the channel for our downtrend here. And then you'll notice it's hugging along the upper limits of that channel. In this case, the momentum even slowed a little bit compared to that downtrend channel. So you've got the nice faster move off of the lows. Ideally, I like this to be a two-wave move off of the lows. That's what's going to be the strongest as far as building confidence for that continuation pattern. I like to see a two-wave correction within that zone of congestion. And then I do not typically use a break of that entire channel as an entry point. This is what you will typically see technical analysts use as a trigger point. The problem with that is many times it will pop it and it'll pull right back smack into the range. So if you do miss a setup, it tends to make a lot more sense just to grab it on the pullback if you get the chance for that to happen. Otherwise, what we're doing is we're using a break of that smaller second channel. And that is going to be my primary entry trigger on this. Now, traditional stop placement is under the low of that second wave of correction. You can use Fibonacci fans to improve your stop placement. Meaning, if you're coming from a low here to a high here, and you've got Fibonacci fans coming on, this Fib fan here lines up with the 61.8%. Your 76.4% fan should line up with that second pivot low there. So now, instead of using a stop under that low, we can use a stop that is adjustable, carrying us higher. So if at some point this just can't get going and we see it break that channel, we can often end up with scratched trades versus any real loss on the position. So that earlier entry trigger and that stop placement are really crucial in keeping your return compared to what you risk at very, very good levels. Oftentimes, Phoenixes will give you 10 to 1, 20 to 1 return compared to what you're risking very, very easily because it is the first pullback or first correction in what can be a huge brand new uptrend. So sometimes it will be a small Phoenix and then it will lead into a bigger Phoenix, which could then, after two waves up, lead it into an even larger Phoenix to continue that trend. Here this morning, we basically get a series of kind of shifts in terms of the momentum on the Phoenix. So in this case, we have a nice two-wave move up, and we call this zone right here a no touchy zone. The importance of this zone is that if you take these two lows here, do even spacing between them, if you look at how long this congestion took compared to over here, this gives us a do or die point where that move needs to continue. You do not want to see it messing around there. So that's going to give you that confirmation on the setup for the continuation. Sometimes you can have it happen where it'll pop a little bit and then go into a base here. And this might cause you some initial concern because, why didn't it just get going? That tends to happen more if the second move is shorter than the first impulse move, but has the same momentum or stronger momentum than the first impulse move. And that still remains a very valid continuation setup coming out of that two-wave correction. A good example of that is on our Russell here. So you can see that the Russell is doing the same thing, had its pull up, its correction. So when it popped again the second time, that was really stunted compared to the first move. So that meant I needed to wait for the Phoenix to double, and then that would give me my secondary entry trigger on it. So this is a beautiful strategy because there are very specific times that the pattern has to set up, and it has very specific traits that it needs to follow in order to follow through well. So for example, if this tried to break right here, which it actually did have a little bit of a spike there, it's too early for a continuation because that second base needs to be the same amount of time as that first base in order to have the highest guarantee of the same amount of momentum or stronger. So our trades on this, as we're looking at it, first, of course, is that trend development. And then we've got a number of ways that that trend development can really play out as it's coming into that Phoenix formation. So one version is it just has, a V bottom here. And here's where you can again see a two-wave correction at times. So you might think that this is the Phoenix right here, and there might be something that tells you, ooh, the time development's not quite right. So typically for a Phoenix, the upside to corrective moves, those should be equal or double, and double tends to be the best. If it's just equal, there's a greater risk it could pull up and then come back down. So the Phoenix will still work, it just won't give as great of return often when that happens. The other way that we can get a Phoenix formation is when you're just coming out of a long trading range. So this could be something where it might be an inverse head and shoulders, and you get the Phoenix as your right shoulder. Your fib fans you would take from here to here, and you would want that shoulder to hook up with the 60 or the 76.4% Fibonacci fan at that level. You could also get what we call a momentum reversal Phoenix. This template again was made a number of years ago, but I want you to look at this portion right here, because this is very, very crucial for how I timed the bottom in today's session. In fact, if I pull up a chart of our Dow, I am going to go down to the 50-tick chart here and look at how well that lines up. So I drew this little scribble years and years and years and years ago. And today it gave me a buy. Here's the start of the slowdown right here, coming off of that downtrend. This is usually two waves right here. Then we get three pivot lows. So this is what we call a momentum reversal here at this point. But usually there's some reason that it can't quite do a full on trend reversal at that point. We will get a break in the upper channel connecting these two highs. So here, and then we will get a pullback where if you connect those channels and move them longer, that pullback will hold within the upper end. In this case, it just hugs on top of it, upper end of that channel. When that breaks, that gives you the buy trigger. Now, I waited for the double tap this morning. I'll show you my exact execution. So you can see, hey, yep, I did trade this. I actually traded the momentum reversal over here too, but ended up scalping those and then went in for the full position here. But I'll show you those executions so you know, hey, I'm not fibbing to you guys. I am actually trading full time right now, and it is my passion, and it's how I learned to trade better is by teaching it. So anytime you can go and hook up with another trader and just talk about different strategies and things that you noticed, you're going to learn from each other. You might develop a series of questions that you want answered that you guys might not have the answer yet, but I take like that scientific method of inquiry when I'm diving into the markets, and I just love to dig for explanations as to why and how things work. Let me show you my chart quick. So I got into this trade and then I followed it for my traders here today. Let me scroll down and grab you that so you can see it. See my shorts from yesterday. Go scroll all the way down here. So here's where we have the initial pattern. So this is where I put on the main trade for the buy here. This is a micro chart. I use the micro charts a lot for timing and then execute on the E-mini. So my original executions were, I tried it right here. First, bailed at the upper end of the channel, tried again at the lower end of the channel because now we had these 3 lows, but it just couldn't sustain the momentum far enough. So bailed as it was kind of slowing up here. And then this is what I was watching. This pullback in here was a little bit steeper than I wanted to see. So I waited for the shift with the megaphone right here. We call this a mega Phoenix. And then when that started breaking higher, I hit a market order. So I had a little bit of slippage on that entry, kept my stops under the lower end of this channel. And so this is showing you some of the advanced trade management that I did in the early stages of this trade. This is one that I held until just before the end of the trading day. And so we'll follow this through here in a couple of minutes. But the first Phoenix is right here. We call this one a pretty steep Phoenix though, because it has a really strong impulse move up. And then the two-wave correction is still very strong on the downside. In a core Phoenix, what you will see is it will have a little bit of a slower two-wave move up and then a more gradual two-wave correction like this. So your correction will go like this to this. So this is a steeper version of that. But the criteria for entering the trade and the action leading up to the trade is perfect. It's exactly what we want to see. Now over here, we do have another type of Phoenix. This is one we call a Chevron Phoenix. I'm not going to get into it too much because it's a more advanced pattern. Basically, instead of getting the two-wave correction like this, we end up with a shift high and then a shift low. But it takes the same amount of time that a two-wave correction would take. And we use our fib fans low to the high, and that gives us our fan support. So we want to see fib fans holding at 50, 61.8, 76.4. Those are our 3 main zones that we look for pivots to happen off of. If the move is very rapid and pulls back about 50%, we will use it where we want to see it hook up with the 50% fib fan. If that first pullback is even stronger, we would hook it up to the 61.8%. So that might mean pulling your fan down a little bit more because that would give you your 76.4%. When you have a flush at the 76.4%, wait for it to pop back up to confirm. This flush is very common with a Chevron Phoenix. And the entry trigger I used was that congestion there, that smaller congestion confirmation. And then we had 2 main legs up into some resistance here, took off some partials, and then just played the continuation patterns again from that point outwards. So this is a little bit of a variation of a Phoenix, but it brings in a lot of our core traits of what we look for in the Phoenix itself. And so if we go back to my slideshow here, you'll notice how close it looked to that bottom move. Another way you can get a Phoenix forming is in the context of a cup with handle. So you could have your rounding lows coming down here, giving you your cup. We would want this pivot high to be underneath the lip over here. And then you would want your Phoenix to be forming in here. Fib fan from there to there, 61.8, 76.4% fib fan. Those would be the main zones that we would be looking at for Fibonacci support. The reason you need to wait for those fibs to catch up with the fib fans is that they're a timing instrument. They tell us how long it has taken for that fan to base. And if you do not have it basing out long enough, you can get trapped with these little midway moves, even if you're counting by twos, because this might have a two-way pullback here, pops, and then has a secondary two-way pullback here. So if your fans aren't showing 76.4% support right here, then you're more likely to get trapped on any breakout here. Another measurement you can use with your Phoenix is look at the amount of time for that upside move. So going sideways, ideally, you're going to be looking for about double. 1 to 1 is your absolute minimum to try to get a break, but those even risk still being a fake break. And sometimes what that does, it'll pop, it'll create that second portion here. So you'll end up with a tilted Phoenix like that. It'll be tilted to the upside. I'll change the color so you can see it better. So earlier setups just have those additional risk factors into them. Another risk factor you can have when it is an early setup is it can look like this. And this can be a little bit more scary. It can pop up, flush down, take out those lows, and then pop back up again. So you could get a megaphone forming here. We call those a mega Phoenix. So those are just some of the ways that the Phoenix pattern can play out. And traits that we want to look for are basically, it's the first correction following a move off lows. We want like that channel to break. Sometimes you get smaller Phoenixes with smaller channel breaks, and then they'll form bigger channel breaks on larger time frames too. And the low of the Phoenix is going to mark the first higher low of the new trend. We're still in the very basics for Phoenix so far. Look at this pattern. This is the euro dollar. And what's so intriguing about this one, you guys, this is actually going back even further. I think this might be from 2015. It's the same pattern we saw today. There's your three lows. Here's your pop, breaks the channel. Then we get our two-wave correction. If we look at that midway zone in the channel, we are holding in the upper end of that zone. So perfect. Now, another way you can look at time development too, is if you look at this middle low here and take that over, oftentimes that is where that next low is going to be right there. So it can look like an inverse head and shoulders as well at that point. Now, if it pops and it can't get up more than like 50% of this rally over here, or gets stunted, it doesn't make it to the full 100% here, then that's where you have to watch for the potential. It might do a secondary base like that. And usually that will give you spacing from here to here to here, and then try to go. So it just kind of widens things up with a bigger inverse head and shoulders zone versus your smaller inverse head and shoulders zone. So that makes this a do or die point, and it makes over here a do or die point too for getting that continuation. What you want to see at this level over here is if that is what happens and you get that next pullback coming in here, we would like it to see a no touchy, meaning not bump into that channel there. That's going to give you a really strong move. So here's a version where you can see that it has a greater potential for triggering a larger trend reversal because your Phoenix is taking place in the very teeny tiny bottom of this downtrend. So it can often kick off these brand new trend movements. This actually looks very close to what I just drew for you because see how it popped? And then if you connect the lows here, see how it doesn't hit that channel there when you're looking at about the same timing between the lows. We call that the no touchy. That is perfect condition for getting stronger buying coming into play. So we also have, kind of the shift in momentum happening over here too. So you've got your three lows here with the shift. As this pulls up, see how it punctures that channel a little bit right there? And then it's hugging within the upper end of that channel. Picture perfect, exactly what we want to be seeing here. So here's the bigger time frame from today. This is showing you what our Dow was looking at like on that bigger time frame. So you'll notice the Dow originally punctured its immediate channel right here. So oftentimes this will lead to reversal patterns like a 2B or a momentum reversal or an inverse head and shoulders. Those type of patterns just become much higher probability once that happens. So by holding the upper end of that channel there, you have a shift right here with 1, 2, 3 lows again. And then that pullback right here after it broke that channel. So you're basically looking at, here's that channel break, here's that pivot low, here's your 3 lows there, your flush. In this case, it went to a slightly lower low, and then the Phoenix right here. So over here, we don't get a flush. We do get that smaller Phoenix right here, and then this is where it goes into the bigger Phoenix here. Again, a no touchy over here. We also call this the Chevron right here. So since this is stunted compared to this move right here, but it is as strong or stronger, that means higher chance for second portion in that Phoenix to then bring in stronger buying coming off of those lows. So these are some of the main traits that we would be looking at in here for this pattern. You can also look at timing between lows. So if you've got even timing here to here, you basically got an inverse head and shoulders forming at that point. So that can give you the setup. Over here, with this being rounded, if this had held a high right here and gone into a base like this, that would have been another Phoenix, just on a larger scale, larger time frame. So your fib fans would come out here like that, and you would look to be buying the setup around here. So this could easily have transformed into that pattern. So let's look at that momentum. When we're talking about our trends, really all of these building blocks that we're looking at, trend development, momentum, time development, they all work together. You can't just take one and have it sitting out there in a vacuum as your guide. We're looking at the trend development that's happening over here. We're looking at trend development within the Phoenix itself, and we're looking at momentum, both before the Phoenix forms and then within the Phoenix itself. So ideally what we want is a nice average momentum move to the upside and then a much slower than average move to the downside. If it's a fully average upside move, 1-to-1 is typically your core target. If that move coming up off of the lows is a little bit slower with its two-wave move, and then it goes into a slower counter trend move, your Phoenix often gains speed, and we call that a shallow Phoenix because it's just forming a little shallow move down in here. And this will typically blast off. The opposite is true if you have a big shot, almost straight up, and then it goes into the base and tries to break up. It tends to have a more difficult time gaining that momentum. It might still manage to keep the trend going, but in a much choppier manner. We see that a lot with news that gapped a security down or that fell down into the open on news, and that's how it will end up recovering during the day. But it doesn't guarantee that you're going to get a full uptrend because this channel could shift enough that it ends up selling off again later coming out of that. So those are just kind of three versions where momentum plays a crucial role in helping us determine what kind of follow through are we going to get on this pattern. Smaller shifts in momentum within the range can also be deadly. So if this is looking like it's triggering a breakout over here, but it's hugging with two lows here and not picking up momentum here, well, this is where we aren't keeping stops under the pivot low. We're keeping stops under the fan. You could also use a trend line if you don't have a fan. Use your trend line there. So when that trend line breaks, that gets you out of the trade. And sometimes this will trigger a reversal for me as well. But it allows me to often still make some small gains on that position because a lack of immediate follow through means that I start to get more aggressive on my trade management. We had a beautiful example for those of you that follow me live. I have a free forward focus session every Friday at noon. And last week we had a Chevron Phoenix, just like what I showed you here a couple of minutes ago, set up right smack at 12 o'clock. And I gave the heads up for it right as we were going into class, and we followed it throughout the entire session. So you guys can go back and watch that entire class so you can see how we do this live and how we tweak positions as they are unfolding. It's a perfect example of those. I teach every day at noon, and many times we have some of these bigger strategies that are setting up. And so you guys get to learn from me real time and not just on like a Saturday class. You get to see how things are actually unfolding, interact with me, get feedback on questions you have. I also pick my traders' brains. I'll be like, hey, Scott, wake up. Tell me what this says to you. So yeah, sometimes people are like, I'm with a client. But it gives you a good opportunity to really learn live as well. I've been trading for over 25 years, you guys, and I've been teaching almost that long as well. It didn't start out with that intention. I just started a blog and was sharing my trades. But from there, people got interested and asked me to help them as well. So that's kind of where it went from there. In the move today, how many Phoenix did you capture? Were you able to trend it up? Oh, yeah. Actually, let me grab that. I can show that to you quick. So here, I followed it, you guys, for our traders. So here, this was that original move, and here's the Phoenix ad. Here's where I was looking at some resistance. We call this a T3 zone of resistance here. I'm still in part of the position of this. This is just partials. And here's where it's corresponding to some fib fan resistance as well. So those coming together were influencing that trade. And then here is the continuation breakout that I took. And you have I had posted another chart of this earlier too, as it was earlier in the base. This is your no touchy. What this tells me is that this can really bring in strong momentum because it doesn't hit that lower end of the channel. And look at the shift in the momentum here too. So we now have a more shallow move. The volume is hard to see on this chart because I don't have it open very wide. But what we would be looking for is a decline in volume here, but very light volume in here, which is exactly what we have happening. So that's another indication that you've got a really nice Phoenix that is developing. And let me click, whoops, wrong button, you guys. I wanted to show you the follow through on that trade. I don't know if I've got all of my charts up on it yet, but because I just exited right as we were going into class. Okay, so here is the move coming out of this. Let me show you where my entries on this continuation were. So what I did was I watched the two-wave correction here. And when that broke, that gave me the add-on spot. And then I added a little bit more here. Now my target level, like I said, since there's a no touchy right here, I expected this to surge. So my partial zone for the next move, this is a T2 target based upon this leg. So we also call this a kneecap. T3 for target 3 is up here. And that is the next target level. So these are the ones that we were aiming for on this. So here's your T2. I put my order on the books as right into that upper fib fan level there for more partials. And here, this is right at my execution. I just grabbed a screenshot there for you. Here you can see it's playing around right at that level. So you're starting to get some, choppiness beginning to come in. But look at the momentum. The momentum here is really interesting because it's picked up so much compared to over here and the original phases of this rounding off. We're really seeing that strong impulse move here. So that for me tells me, ooh, with this nice rounding lows, our daily timeframes were at some decent support as well. I want to continue to play this in the direction of that trend. Now, normally this next correction here is going to be about half the size of our Phoenix. So using this as our entire two-wave Phoenix now, what this meant was this base here, I was looking for it to be about half the size. Basically, I'm looking for kneecap again. I do use both tick charts and line charts, candlesticks and line charts, and then time frame charts and tick charts. So I will use like a 30-second chart along with a 200 tick chart. I use them both. And there's reasons behind doing that. I won't get into that here today because I could give a whole class on why, but I do use both sets of both. So what we needed to see over here is when you're coming up out of your Phoenix and you want a continuation play, the strongest move is going to be a Phoenix into a 1, 2, 3 into a widening up zone. That's going to be the strongest play. If it gets stuck at this 50% point and it bases only for about half of what it should, then it could go and have the same range as this, put in a third leg up and have a much harder time up in here. It also opens the greater door for risk that this could double out further and go into a bigger base at that point. We've seen this happen a lot over the course of the last week, a number of examples of this. And in fact, that is what happened on our trade on Friday in class, was it did that because it had a slower start than what we wanted. We still expected it to go higher. It still managed to go higher, but it didn't do it as quickly as we would have liked with the earlier setups. So these are just telling you different types of time development as far as, how long it can take for those to go. And what you can do is you can go and add a fib fan from that channel. And that's also going to give you a time zone over here. So wherever your 76.4% is, that's going to give you a time zone for how long that base out could be at that point. So here is, kind of what we're seeing in terms of comparison for momentum. So it's nice to get that average momentum, not a sharp 1 bar surge. That is going to be detrimental, because that means that the continuation breakout can struggle more. So having that, nice, got a nice little two wave. Here's our little two wave over here, and an additional shift there, the no touchy there. That's perfect. Here we don't have a no touchy because there's not really a second pullback here. But if there was, it would be right about there. And that's where you would want to see a no touchy happen in order to get a really strong move. If it does hit it, you can still get a third move up. It just means it's going to have a harder time breaking that channel, and it can easily go and flip on you again like that instead. So what we're looking at are, what's the odds to keep that momentum going, really? So here's just another look at the momentum and seeing that shift taking place. This is, we've got a couple of inverse head and shoulders going on in here. Notice again that second correction, about the same amount of time as that first correction in terms of the development. And that's a huge pro there when it doesn't just take off immediately. So here, this is just showing you what that, looks like on this morning for my trade here this morning, and what it looks like in terms of the previous session. And here, what we're talking about is time development. So there's a couple of aspects in time development. We want our congestion to often be comparable to previous waves of congestion where you have similar impulse moves. We also want time development to be comparable between lows. Another way you want nice time development is distancing between the highs. If those distances between the highs within that Phoenix are about the same, that's usually where you're going to have a good breakout spot. So those are just some of the additional ways of time development. And then of course, another time development would be your fib fan. And all of those types, there's actually 6 different types of time development. Again, I don't have time to cover all of them, but all of those building blocks go into creating these patterns. And I'm going to be doing a class on Saturday and Sunday. It's a 2-day class where I'm going over all 6 of my core trading strategies, the strategies that basically almost 100% of my trades are. And every other strategy is really just a variation of those. So we're going to be looking at building blocks on every single one. I've got templates drawn out showing entry points, trigger points, key do or die points, all of those things on each of those strategies. And we're going to be doing that every day at 3 p.m. Eastern. They will be recorded. So if you can't attend live, you can join and watch the videos. And you can join me in my League of Traders trading forum for any questions that you might have on them as you're studying them as well. So I've got that coming up where you can really learn a lot more of these details than just I have time to go through into here today. I didn't actually put an end time on my sessions on Saturday and Sunday because my traders always joke that I'll limit it to like 2 hours or something, and then I'll end up doing it like for 3 hours or more. My email address there, Sunny, is Toni@ToniHansen.com. Yeah, I would love to catch up with you. I know we kind of like it's like passing each other in the hall. Hi, but that's about it. Let me go ahead and show you what else we've got here. Let's see, where did my Oh my gosh, you guys, you can get into so many great details looking at all of these put together. This is from a different Phoenix class, but look at how all of these building blocks are really working together. You've got your time development for your inverse head and shoulders. You've got your nice shifting momentum and your Phoenix, and you've got kind of the stunted move on this Phoenix, meaning that, hey, this could have gone into another base year. It didn't in this case. Instead, it did it as a shifted continuation before it gained steam. But it just shows you a lot of those pros coming into play here. Let's go back to the one that I had open here. And let's look at those entry triggers and the stop triggers. So since I first created this template, this particular one was made in 2018. We now rely a lot more on moving and adjustable stops. So I am going to be taking this channel here. I'm going to be looking at zones of previous zones where we have like things where like they kind of double tap, lows or highs. Look at that amount of time. And then as this is coming into that zone, take that over there, that same amount of time, pull my trend channel down and put my stop under that to give it a little bit of extra room as it's playing out there. So just giving a little bit of extra room because that can do like a little bit of an extra blurb here, like a double tap that I want to be prepared for. So that stop, you'll notice I've also got, in addition to the 76.4, I have a 78% fib fan. That is what gives me that buffer zone. So when you see my charts, you'll see that buffer zone fan on there. You can also look at zones where you get, those slightly higher highs or slightly lower lows. Take a look at what the average is just for those like little small double taps and add that under your 76.42, and that'll help keep you from getting flushed out. It's very, very rare to get flushed out if you're waiting for the channel break to happen. The one instance in which you might is, let's say the channel breaks here. Well, look at this time development here and then look at it at this point. It's a little bit early. So it could pop up here, flush down here, take out that low, and then come back up once it's done the time development where you've got the comparable time development for those pullbacks. So that is a level that a lot of traders will get caught in. And you might need to see it on like a time frame chart. Maybe on the tick chart it looks great, but it doesn't show it on the time frame chart. So your fib fans are going to go from here to here. And what you would want to see is that this low would hook up with, it needs to hook up with either the 50% or the 68.2% fib fan. So what's usually going to be the 50% if this has a really strong momentum move to the downside. Otherwise, it's usually going to be the 61.8% fib fan. And if I got a chance, I also have for those of you that trade with NinjaTrader, I also have an indicator that you can purchase for $79 that has all of the fib fans because they don't have them built in on NinjaTrader, unfortunately. And you can get that at just Toni Hansen / Trade Tracker Pro. I'll put that in here. ToniHansen.com / Trade Tracker. Actually, I think it's just Trade Tracker is the link. And there's videos on how to set it up and how to use it as well. So it's not just the indicator and that's it. There's also those videos involved. So here's another example where things are getting kind of a little bit more difficult for our entry. So what we have is two kind of stronger pullbacks in here. And oftentimes what that can do is this might be your 61.8% fan, and this is going to be your 76.4%. Well, it might pop up and this time development is too short compared to, previous zones of congestion. So it might pop up and do a right shoulder over here. And you get an inverse head and shoulders. So we've got a couple of potential entry points. So if this is still a little bit early, but you want to, give it a try, I might build into a position starting in here. But then use the smaller Phoenix. It might be there. It could be up here, and use that as your entry point. Those are the two main entry points that I'm going to use. I will almost never use 3 unless this has a lot of back and forth bar action where there's not really clear waves. And then I will use that channel break. But that's one of the only occasions that I would do that. So here you can see 3 different entries. And again, number 3 is the one that I would be least likely to use. It also runs the risk that since this is a shorter time development right here, that this could be a trap. So not the best location to want to get into a position. So here, if we look at our move today, we had this as just a really rapid 2-wave move down. There wasn't another shift like here. Here you have a shift. So I didn't use that as an entry point. What I did was I waited for this megaphone, which looks like this. So you got like, here, hold on, it looked like that there. Kind of had a little bit of a lower low, and then it went into kind of like this megaphone zone there. So that's what I used for it. And you can take that channel break there to get out or to get in as your entry. I had a little bit of slippage because I used a market order, and I was playing around with getting into it coming off of these previous lows. I used this as a momentum reversal plus right here, and then this as a momentum reversal. And it was just going so fast at that point. So I was a little bit slow on catching it when it finally went there. Reason I took partials here is because we started to shift momentum at congestion. This is what we call a T4 target, a target 4 zone. So we had the 3 highs there. So that's a potential zone that you could get a flush back into the channel. Not necessarily a reversal of the trend, but it can get back a lot of your gains really quickly. And then when it pops back up, we call this a momentum reversal plus. Got out of more of the position there at that point again. And then that's where you can see me building into it again. So stop placement, again, we're going to be using the channel or the fib fan and moving it up along that band level. So that's going to help protect us if this decides to do a secondary correction to offer a continuation. Now, if this is just the first counter trend move and you've already got like an extreme upside move here, and this is possibly the start of a new downtrend move, you might only get 2 waves up before you get a breakdown. We would call that an avalanche. It's the opposite of Phoenix. So the trend placement obviously is very important where this Phoenix might be, because if it is forming after you've already had a major uptrend and it's just trying to start to shift on the downside, yeah, you could still have a Phoenix here, but you're only going to likely get 1-to-1 ratio on that upside move. And so you would want to be aggressive as soon as it gets to like 76.4 to 100% price extension there. Good example of that is on our indices here today. Where did I put my other chart? Hiding. I think I put it in the background over there. So we don't see it fully on this one. But for example, right here, that is considered a little baby Phoenix right in there. But you're dealing with a larger trend exhaustion on the upside now. So when this started to shift here, right as we were coming into class, this was a T3 target level coming back into some previous high zones over there. That's what got me out of the entire rest of the trade at that point. See if I can tighten this up here. So you can see that channel. I guess it was more T4. Here's T3. And then there's your T4. T4 is based upon more of a megaphone type of look to it. Is Trade Tracker only available for NinjaTrader? It is. A lot of other platforms have their own built-in Fibonacci fan tools. We are developing it for wealth charts. So for those of you that has wealth charts, I think Thinkorswim already has it built in. You just might have to give them a call to ask where they are. TradeStation has them built in as well. So we built our own for NinjaTrader, and then I'm working on building one for wealth charts for those that use the Wealth 365. Scott says it's under the drawing tools on TOS. All right, guys, let me go and move this forward here. And initial target levels, we usually go for a 1-to-1, but in most cases, our aim is really to go for much further. So you can see here, this is essentially what I did with today's action too, except that I used that final shift to get out of the rest of the position in today's example where we have the same pattern here. And the action that's going on here into the close is just the reverse pattern. We have an avalanche here into the close. This is a little short for one, but if you look at the charts currently in the market, we have one. All right, you guys. So I want to thank you for joining me here. And I'm going to tell you a little bit about our seminar that we have coming up for the weekend. I'm very excited for this. I like to keep all of my education very accessible for you guys, but I do have staff that I need to pay to keep the website running. All of my earnings are from trading. So everything that I earn from the website is to keep my folks here to help continue to provide education for you guys. So we need to get some money coming in here before the end of the month to get my staff paid. So we've got a boot camp and you're going to learn tons and it'll definitely be worthwhile. We're going to be going over all of my all-time favorite trading strategies, you guys. So just like what you saw here today, but I'm going to give you complete templates. I'm going to give you written examples you can print out so that you can create your own trading journal of the strategies. We're going to go through a ton of examples as well. So you'll have many, many examples to compare to. And you'll continue to get examples emailed to you over the course of the next 2 weeks as well, so that you can see, hey, how have these strategies played out since Toni gave her class? And I will pull them from trades that we follow in League of Traders or that I have taken throughout the week myself. So you can actually see legit entries, exits. You might even see examples from some of my other traders. I know Donna was trading those reversals this morning with me, and she was trading it on the NASDAQ though. So I was in it on the Dow and she had it on the NASDAQ. We didn't know that until afterwards. I saw that, she posted hers, but it's pretty cool because, she learned to trade from me, you guys, and now she can go and find them and execute them on her own, which is the end goal. The end goal is to make you self-sufficient so that as your life circumstances change, you can change how you trade and how you approach the markets. I went from a stock trader as a swing trader and investor to predominantly trading futures right now. And, if I move or end up somewhere else, I might change back to something else. When I was on the East Coast, I traded a ton of morning gaps. So it just changes, depending upon where I am. So in our bootcamp classes starting every day at 3 p.m. Saturday and Sunday, and we're going to cover my 6 favorite trading strategies. how I break down price development of each strategy into our building blocks, how the building blocks work together. Nearly every trade I take falls into one of those 6 categories. You're going to have templates. You're going to have trades that were from live examples, risk management parameters, and every session is going to be made available on demand. You are also going to have access to League of Traders forum. So that's not on here, but that's that Telegram channel forum where you can see me post different setups and strategies as well. And you can come in and ask any questions and share things and pick my brain too. So thank you everyone for joining me. I hope you learned a lot today, and I look forward to filling your brain with even more knowledge. I am on Twitter, but I'm not really that active on